events up to the reporting period. Something when, let me tell you something. You know, your financial statements, when it is prepared at the year end, isn't it? It is prepared at the year end, let's assume 31st December. 31st December. But when it is authorized, do you know when it is authorized? 3 months later into the AGM, could be, yeah, by the directors, board of directors, it is authorized 3 months later. So even if it's 31st December year end, but January, February, March, 31st March, you're gonna authorize and finalize it, and then carry on into the next accounting period accounts. Within this 3 months time, many incidents can take place. Business incidents, like a major customer become bankrupt, you declare dividend, could be, then inventory is lost, theft could be. So events that take place, transactions that take place, events basically. These events are known as events after reporting period, okay? Reporting period was 31st December, but authorization period was 31st March. Within this period, anything happens. These are known as events after reporting period. These reports are two types: adjusting, non-adjusting. Adjusting events, non-adjusting events. Okay, you just need to memorize what are the adjusting events and what are the non-adjusting events. Adjusting events, adjust within the financial statements. You know, the notes we do, yeah, adjustments we do after the financial statement, the financial position. There's some adjustment, 4 or 5 notes given. So adjusting events that exist, we call it exist within the year-end accounting period, and that can heavily influence the financial statement. So you need to adjust, you need to amend your FS financial statements. Non-adjusting event, you do not. You do it next accounting period, okay? What is basically happening, let me draw a line here, like January till December 2018 was there. Then 2019, again after December, January comes, doesn't it? January 2019 till March. This January till March, anything happens, you can adjust in 18 stuff, 18 financial statements. These are adjusting events. If these are non-adjusting events, these are you need to show it in 2019 income statement and balance sheet. Non-adjusting events. But non-adjusting events, if those are very heavy, you need to write a disclosure note, going concern problems, something like that. Let's read what are the adjusting events, by the way. Examples of adjusting events you need to memorize, I said. The settlement after the year end, the court case which confirms that a present obligation existed at the year end. So court cases, IAS 37 and adjusting event, both goes to along with court cases at the year end, fully confirms that obligation. It's a provision, could be, you have to pay that money and you need to adjust it into this financial statements. Assets where a valuation shows impairment, in short impairment, you need to impair it. Inventories where net realizable value falls below. Net realizable falls below. Trade receivables where the customer becomes insolvent, bad debt or irrecoverable debt. So just 4 items, remember it, memorize it. These are adjusting events. Non-adjusting events, business merger and combination, when two business comes together, and today you're going to learn a little bit and next week as well. Major purchase of an asset, losses of production capacity caused by fire, flood, strike. Do remember, it comes in the exam, I have seen it. Because of these things, natural disaster, you have losses. You don't need to adjust it in this accounting period. Adjust it, show it in 2019 as well. Also dividend. Also dividend is your non-adjusting. Going concern, you already know, business should be going concern. If there is a problem, they're going concern problem. Disclosure means notes, you need to show, write the disclosure notes. Okay, if you have to do, I have done quite a lot. If you have to do activity 10, I'm reading it for you. The following issue have been raised by the directors of Sunny Limited concerning the financial statements for the year ended 30th September. This is my year end. Some items of inventory are valued at their cost. In the financial statements, they're sold at net realizable value. So this is definitely what? Adjusting or non-adjusting. Let's see, what is the question, by the way? This is an adjusting event, or they're asking true or false. Tell me, adjusting or non-adjusting, or true or false? Yes, Rosie says true. Hakan says true. Everybody should say true. 100% true. Mary Vivian, thank you. Where are you getting from this answer? We're getting this answer from? I'm highlighting, isn't it? This one. Easy peasy, lemon squeezy. It was true. Okay, next one. In October, the directors announced their proposal to pay a final dividend of whatever amount. This has not been recognized into the whatever. Indicate whether this is adjusting or non-adjusting. Tell me. Adjusting or non-adjusting? Thank you, Sylvia, Rosie, Vivian, Akane, everybody. Thank you very much. Moving on. Come on, never ending. Number C is there. Let's finish C, and activity 11 will be homework. An employee was dismissed. In August, the former employee started legal proceedings for unfair dismissal. In October 2016, the lawyers advised that Sunny will probably lose the case and think that a reliable estimate damage of, it can be reliably measured. What do you think? 1 or 2? This is an adjusting event and the provision should be recognized. What do you think of 1? This is a non-adjusting event. What do you think? Let's see the answers. Let's see everybody's answers. Ooh, very good. Rosie, Zivil, Vivian, Mika, Jessie, Mary, Hakan, Camelia. Everybody agrees, Abhi. Everybody says adjusting event. Number 1, it is 100% provision. It is a Rabia, thank you. It is 100% provision, no doubt. This is a provision. We're going to lose the quote. It's a probable, and we got to adjust it. How do you know it? Because we have memorized it. From where? From this one. See how